So we're getting to March of 2022, literally 2 years from the start of the pandemic. And a lot of people are starting to look back at the last 2 years and reassess some of the choices that they made during that time and what that means for their future. One of the biggest things people are wondering is, did I make the right choice, or did my life, by making choices 2 years ago about forbearances, and now what we're talking about, loan modifications. Was all of that a good idea? Was it a good idea to go into forbearance? And now you're coming out of forbearance. Is it a good idea to get a loan modification or to try to pay off the amounts of money that you owe? Was it a mistake to go into forbearance in the first place? And are you making a mistake now that you're looking at the possibility of getting a loan modification and how that is going to affect the rest of this mortgage and the rest of your life?
Let you go.
So I'm going to take you back in time to March of 2020. At that time, as we all remember, the banks and the government gave people an option regarding their home mortgages. They said to them, listen, you don't need to pay this for some period of time. Don't worry about it. Everything's going to be fine when you come out. We're not going to take your house. How true was that? I'm not too sure. Now, the first option a lot of people had was to go into forbearance. Now, a forbearance basically was a delay in paying the mortgage payment. Now, this is the big thing people don't really get. This is a delay. This is not a permanent pause forever, nor is it a forgiveness of the amounts of money that you owed during the forbearance. It is basically taking what you owed at that time and putting it at a later date, either through some sort of lien on your property at the end, or having to force you into a loan modification, or making you pay all of it at that time. Now, a lot of people didn't realize that when they took the forbearance, that they were going to be basically put up against the wall later on and said to them, listen, you're going to have to do something about this money now. We're not really sure how you're going to manage this, but you have to deal with it. The reality is that some people will never come out of forbearance, and when they do, they are going to be faced with a foreclosure. Some people will never catch up, either because the banks don't offer any kind of assistance at the end, or they made a mistake and took on way too much forbearance. That's a big problem. There are government assistance programs for forbearances and paying back the forbearance, but not everybody qualifies. So, did you mess up your life by taking a forbearance? Possibly. There are some assistance programs which we're going to talk about, and if you look at my other videos, I go over pretty much all of them. But that's the issue. You might have to go into a forbearance assistance program to get yourself out of the problem that you get yourself into. So that is one of the situations, one of the reasons why you messed up your life by taking a forbearance. The other thing you have to understand is that you will always owe more money at the end of the forbearance than you did when you started the forbearance. People don't get that. There is no forgiveness here. All the money that you were supposed to pay during the forbearance period, the bank will charge you for all of that. And a lot of people, when they do the math, they say, well, yeah, well, it's some sort of weird math in their head. No, it's the exact amount of money you were supposed to pay. So if you were supposed to make 12 $1,000 payments, at the end, you will owe $12,000 more than you owed when you stopped paying the forbearance. People don't get that. It's a problem, because when the forbearance ends, they're faced with the reality that there's a $12,000 bill there that they're not going to be able to understand or manage. Now, a lot of people also, at the end of the forbearance, were given the opportunity to get a loan modification. And we've talked a lot about loan modifications on my Motivational Esquire show here. And I've explained to you the different things and the different pros and cons of what the reality is of when you take a loan modification, how to get one, and if it's worth it. Now, again, the purpose of this video is to talk about, did you mess up your life by getting a forbearance, and then are you messing up your life by taking a loan modification? Now, relying on loan modification has a couple effects. Number one, the application process is stressful for a lot of people. Not everybody. Some people just get a loan modification in the mail and that's it. They had to do nothing. It depends on your bank. But for most people, this is a stressful situation because any kind of financial application causes people to freak out and stress about things that are out of their control. That's the problem. This situation is out of your control, so people don't like that. So they stress, and that causes a lot of people to freak out and have a few really bad months while they're waiting to see what happens with their loan modification review. Again, the same situation. When you take a loan modification, you will owe a lot more money than you did before the loan modification and before the forbearance, because the bank takes everything you owed and turns it into a new mortgage. So if you, again, in my situation, my example before, if you had $12,000 in arrears, which is the $12,000 you didn't pay, your new loan would be whatever you owed at the time plus $12,000. You will owe more money, and since the mortgage starts all over again, you will owe more interest because you're paying more over time, which means more interest payments for the bank. That's a win-win for the bank. It might be a win-win for you, but you are paying more. Now, the next issue that a lot of people face when they're looking at loan modification is that the payment isn't necessarily less than what it was when you started. There are different kinds of loan modifications out there. There are some that basically look to make you current, which is the majority of these new hybrid loan modifications that we're seeing. The purpose of the loan modification is not to make the payment more affordable. What it is the purpose of loan modification is to deal with what you owe in the forbearance. So there's a big difference. In many cases, the payment might actually go up, which is something that people get shocked about. It is possible for you to get a loan modification and the payment to go up. So be very, very wary of that because it could happen to you. The last thing, and if you understand HAF, because I've talked about HAF in many other videos, HAF is a government program that gives free money to people to pay back the forbearance amounts. Now, the problem is that if you get a loan modification with your bank, you're not going to qualify for HAF, which means that all you get is whatever the bank gave you with a loan modification. That freaks people out. Now, there are different ways to look at what's going on. How should you look at the situation right now that you're coming off of forbearance and you're coming into loan modification? There's three ways to look at it. And the purpose of my Motivational Esquire is not only to explain the law to you and the law of the mortgages and loan modifications and foreclosures and all that, but it's also for you to get a sense of how it is that maybe you should be looking at these things and not freaking out. Number one, when you took the forbearance way back when, 2 years ago, you did what you had to do. There wasn't much of a choice for a lot of people. Some people chose to get into forbearance even though they could make their mortgage payments. That's fine. You did what you had to do at that time. You survived, which is the purpose of these forbearances and the loan modification is basic survival. It is not a financial tool to make you more money. All of these things were tied into the survival and what we needed to do at that time. Looking back 2 years into the future, or looking back that we are 2 years in the future from that time, maybe you would have done something different. Who knows? But you did what you had to do at that time, and you shouldn't feel bad about it because who knows what the alternative could have been. Now, number two, and this is really, really important for all of us to think about, is that we all made it through COVID. We all survived COVID. Financially, we did the best we could. A lot of people didn't come out of it. We all know people who were affected directly and severely by COVID. So the next thing to think about is that we all survived it and you made it through. If you're looking at my video, it's because you still have your house and you still have a chance to keep it either through loan modification or through some other means, whatever that might be. So that's really important to keep in mind. Now, the last thing to think about is you got to look to the future. The future is bright. If you still have your home, your home is probably worth more than it was in 2019, right before the pandemic. A lot of homes have gone up in value in most of the United States. So you have still this piece of real estate that has substantial value. that is good for you. Now, you can deal with the amounts of money that you owed from the forbearance in a couple ways. Number one is you can make extra payments, and I've talked about how to do that. There's a specific way to do that, and it's not just sending an extra 50 bucks, because that's not going to deal with the forbearance lien at the end. There's other ways to deal with that, and you can watch my other videos that I get into how you actually pay off these forbearance liens in a way that basically it doesn't affect you. The other thing is refinancing. Now, we're going to talk about refinancing in a second, but I need you to understand it's time to look to the future. It's not time to think about the past. What's done is done. The future is bright for most people. You need to focus on the fact that you still have your house and that you have opportunities to basically do a lot of things. And one of the things is refinance. Now, I'm going to talk about this in my segment, Is That Legal? Basically, what we're going to talk about is how to refinance, and is it even possible to refinance after a loan modification?
Now that you're gone and we falling out, I can't stop thinking you're all I go on about.
So the question I get a lot is, can I refinance after a loan modification? Or when can I refinance, and how does forbearance affect my refinancing? So there's a couple things you have to understand about refinancing. Refinancing is basically getting another bank, not your bank, another bank. It could be your bank, but generally it's another bank that will take on your loan and give you a brand new loan, a brand new mortgage. So you're going to have to pass credit checks and equity checks and all the other checks that you need to pass, including to make sure you have income and you have the ability to pay back this loan from a new entity. There are strict rules about refinancing and things you need to understand. The number one thing you need to get is that you cannot refinance while you're in forbearance, nor while you're in default. Even if your credit isn't affected, even if your credit score could possibly handle a refinance, banks will not refinance you if you are in foreclosure, in forbearance, or in default of your mortgage. They just won't do that. And that counts for the first or second mortgage. If you're in default on any mortgage, then you cannot refinance. So refinancing is only a tool for people that are current. Now, what you can do with that is that you can use loan modifications to get yourself current. That's the biggest tool. You can get yourself into a loan modification, even if it's hard to afford it for a while, but at least that makes you current, and it opens the door to refinancing in the future. So with that question comes, when can you refinance after a loan modification? Can you refinance immediately after loan modification? And the answer is no. Loan modification, number one, does a couple things. It does affect your credit. A lot of people don't understand that, but it will affect your credit. But even beyond that, even if it doesn't affect it very much, or you had excellent credit and there's a little bit of a dip, and you still qualify potentially for loan modification, for a refinance, you still need to wait. Most of the time, FHA, I believe, is 3 months. That's the only one if you try to get an FHA refinance. But even they usually default to the normal rule, which is 1 year, 12 payments. You need to make 12 on-time payments of your loan modification for you to have a chance to refinance. Most banks will require that. It's not an absolute rule in all cases. It depends on a lot of other things. Maybe if you put a lot of money down, all that sort of thing. But if you're not going to do that, if you're just going to take your normal mortgage, your loan modification, and then you're going to try to refinance, you need to make 12 payments. But remember, loan modification actually opens the door to refinance. You cannot refinance without first doing a loan modification or getting yourself out of forbearance. The 12-month rule also applies for people coming out of forbearance. There are rules out there for 3 months and 6 months, so you shouldn't just take my word for it. You should talk to the bank, but most likely it's a 12-month rule. So that's it for now. Good luck.